What we see at the Fed right now is absolutely desperation. Uh, there's a big, huge problem coming down the pike. The Fed might not be able to stop it. Stay tuned for more information on this coming up right now. Okay, there's a big, huge problem for the Federal Reserve coming up right up soon. The problem is inflation. Now, I'm going to read you an article here. It says, get ready for pumped up prices. Oil could surge nearly 20% and take gas with it. Get ready to open up your wallet again a lot wider at the gas pump. A major Wall Street bank has reiterated its bullish call on crude. The fossil fuel sits at a 4-week high following this week's U.S. missile attack on Syria. RBC Capital Markets head of commodity strategy and CNBC contributor Helma Croft predicts prices will climb to the low 60s within months. Nearly 20% move from current levels. That would translate to roughly $1.80 gasoline spot price. We see it grinding higher over the back half of the year. Recently, we're coming out of refinery maintenance season. So we're going to start to see draws of the U.S. inventory. Those high U.S. inventory numbers have really been depressing prices. Summer driving season will also give prices a boost, and demand won't fall anytime soon. Crude initially jumped 2% in a reaction to the U.S. airstrikes in Syria before giving back some of those gains. The commodity settled up 1% on Friday to $52.24 a barrel. Okay, so what can we make of all this? I'll tell you what's going on. There's a war going on with the Fed. The Fed's trying to stop inflation. That's why they're raising interest rates. But they're not only raising interest rates. That's not enough. What the Fed's actually having to do at this point is they're having to sell off some of their $4.5 trillion in assets. They're going to try to liquefy their assets. And they say that this is going to act, again, as a rate hike. So they got a rate hike plus moving these toxic assets into the marketplace, these bonds, lowering their balance sheet. So the net effect that the Fed's looking for is to try to slow down this inflation. They see the pot boiling over and they want to take the heat off of the pot so that they can slow everything down. The big question is will this work? Because I'm going to tell you, boys, I'm going to tell you right now, if the Fed fails at this, if they cannot cool this thing down, if they cannot bring us back to a depression or a actually, it's a depression. I used the right word. They call it a recession. If they can't get us back in recession again, the Fed, and I'm serious, the Fed is trying to put us into recession. That's what they're trying to do. They're actually trying to do it. Why don't they be open about it? Why don't they be open and honest? Why don't they say to the American people, we're trying to create a recession? Because they wouldn't get away with saying that. That's why they don't say that. But it's true, though. That's what they're doing. They're trying, and if they're not successful, this economy is going to heat up and heat up fast. The oil price is going to go up, and the game is going to be over. The whole game's going to be over because you're going to head into your hyperinflation that has been predicted all these years. If this whole thing, if the Fed cannot control this. And this is a big if because you got a lot of things happening simultaneously. Trump is actually pushing us toward this economic recovery, and this economic recovery is what's going to bring the crisis. Now, I've been pointing this out for months, that the strength in the economy is what's going to create the crisis, not weakness. I've been pointing this out, and screaming it out to anybody that'll listen, over and over and over again. And people have been hearing me. I've been hearing economists say things that I've never heard them say before, and it almost sounds verbatim like what I've been preaching and what I've been saying. And I think that voice is going to get louder because they're going to start seeing it soon too. A lot of them that haven't seen it, they're going to start seeing it. And when they start seeing it, you're going to start hearing what I've been saying from other lips besides mine. So, the time is coming close. If the Fed can slow this thing down and stop it, and that's a big if, because this is a train. This is a train, and the Fed's got a dump truck on the tracks. A dump truck full of gravel on the tracks, and they're going to try to stop that train. But that train just might plow right through that dump truck full of gravel that's on the tracks. And if it does, we're heading toward the hyperinflation. But we're also heading toward an economic recovery that's going to spur that hyperinflation into action. You see? Because you do not get a hyperinflation from a depression, from a deflationary depression. That's not what causes. That's when your money becomes worth more because nobody has any money, you see. A hyperinflation is caused when people lose confidence and lose faith in the value of their currency. It's something that's a mental effect that spreads. When people say, "Hey, I'm going to go out and buy that new TV," and I've been saving for the last 2 years because we've been in a they don't say deflation, but we've been in a stalled economy and we've been saving. They say we've been saving, but now the prices of TVs are going up, massively going up, and we better get in there and get ours before they're all gone at this price, because next month they're going to be half again more when the new ones come in. So they take the money out of the bank and they run and buy the TV. Well, a dozen of their neighbors are thinking exactly the same thing. And the prices do go up, and it makes them go up even faster. The more people pull money out of the bank, the more people will pull money out of the bank. See, in the opposite direction of this, when people are in a saving mentality, when people are scared and they see a bad economy, they're in a saving mentality. And if you know anything about, have you ever heard Harry Dent talk? That's what people get like when they're scared and you're in a deflating economy and you're in a depression. People start thinking like Harry Dent's way of thinking, that they're not going to spend, they're going to haul their horns in and save. Now we're moving in the opposite direction from that, but the Fed's trying to get us to go back to that again, to that Harry Dent way of thinking. They're trying to create a depression. They're raising interest rates as fast as they can, and now they're going to start to try to sell those toxic bonds and assets so what they've done is they've raised the lower end of the interest rates, but what they've done is the higher end has actually come down a little bit. So that's what it's doing, is flattening the yield curve. See, that's flat, right? It's flattening the yield curve. So by selling these toxic assets, they'll move the high end of the yield curve up and the low end up, and they'll raise interest rates. This is what the Fed's trying to do, and they're trying to encourage the stock market to go down. See, everybody thinks that the Fed's trying to get the stock market to go up. No, the Fed's trying to get it to go down. They're trying to get everything to go into a depression. They want a depression, and they're trying to bring a depression on. At this point, they're getting very nervous because everything's starting to heat up so fast. They're getting nervous, the Fed, really nervous, and they're really going to try to pull the trigger on creating a depression. But if they're not successful and this thing rolls over what they're trying to do, and it just well might, we're heading into a hyperinflation. So everybody, thank you for listening. Enjoy making these videos for you guys. And like and subscribe, and we'll catch you in the next video.